Welcome everyone in 2025. This is our first webinar for the year, so Happy New Year. I'm very excited to start the year with a huge bang. I have Anna Agu here, who is an amazing expert regarding crypto and the crypto regulations, and I'm very happy that she joined me today here. Many times we are hearing that crypto is going to replace the banks, crypto is the new payment method, it's quicker, it's cheaper, is it? It's anonymous, is it? So there are a lot of questions around crypto. It's not just for investment. Actually, crypto was first invented to replace the current banking system. So the original purpose of the crypto is to transact value and use it as a payment method. But how is it used today? What are the different complexities around the world of crypto? What are we allowed to do and what are we not allowed to do by regulation? What's happening? Is it even regulated? Can we still be creative and use it in a way that we might avoid the banking system or it's dangerous? So these are the questions that I'm going to discuss with Anna, and I'm very, very happy that you joined us, Anna, today. Thank you so much for being here. Tell us a bit more about yourself and how did you end up with crypto?
Yes, hello, Victoria. Be here. Hello to everyone. My name is Anna Agu. I'm a managing partner and co-founder at Lex Law Office. We are a law firm based in Tallinn, Estonia, and Vilnius, Lithuania, helping mainly fintech, IT, and blockchain-related companies with the legal matters. How I started my journey in crypto, let's say it like this. It was the year 2017 when Estonia was the first country in the EU who started to regulate the virtual currencies and virtual currency service providers. I was working actually in the tax law field, and one client called me and asked what is happening with the crypto regulation in Estonia, and I had no clue about this. And they asked me to have a look on the draft of the legal act. And I had a look and found out that, wow, we are starting to regulate the virtual currencies. It's something new, something interesting. I had a question in mind, what is happening in other countries? And I found out that's nothing. We are the first one who are trying to regulate it in Estonia. And this is how my interest to this industry raised up. And we started with the new project and helping the first clients with the virtual currency registrations and licenses and compliance for the virtual currencies already at the end of 2017. So, have some experience in this field. Also, I'm a public speaker, taking a part of the several conferences around the world. I was a part of the blockchain working group who was working on the EU level on the virtual assets related regulations and proposals for those regulations. Advisor for some projects and working actively with the legal matters related to the virtual currencies.
Wow, so you are the best person to talk to regarding crypto as a payment method and about the regulations and the rest. So thank you very much for joining us today and sharing your wisdom. I've got a lot of questions, but usually what we always do, we collected some main questions from the audience before the webinar started. So that gives us a nice structure to go through and answer to all of those questions that we have. So let's see the first question, which is actually my first question is as well, that what is the history of crypto? I understand that it was originally intended to be used for replacing the banking system. I remember back at the day, everybody was talking about Satoshi Nakamoto's new way of Bitcoin, which is transacting value, and it was supposed to be anonymous. So how was it originally intended to be used, and what's happening? How is it used now?
Yeah, thank you, Victoria. Correct. Everything started in 2008 when Satoshi Nakamoto published the white paper of the Bitcoin. And the first transaction was in 2009 when Satoshi Nakamoto sent 10,000 Bitcoins to another participant. The idea of the Bitcoin was to create the digital currency to avoid intermediaries and central banks. So basically, idea was to use virtual currencies as a peer-to-peer transaction method for the transferring the value. This was the original idea. And of course, if we're talking about the usage of the virtual currencies today, it's much broader. We're talking about the crypto as an investment instrument, several investment funds, and also private individuals, companies are using virtual currencies as an investment instrument. Then we are talking about crypto as a payment methods. Especially crypto processing is growing very fast. Companies are using crypto as a payment method for their goods or services. And also it is popular in terms of the cross-border payments. If you need to send today 10,000 euros from, let's say, Spain to China, it will be very challenging and will take a lot of time. And the banking fees are quite high. If we are doing this through the, for example, stable coins to keep the value, it can be done within some minutes, and the funds will arrive from the wallet in Spain to wallet in China. So, of course, virtual currencies are giving a lot of new possibilities to the users, but also this is creating additional risks, which are related with the illicit activities as well. We will talk about this topic later on. Also, I would like to highlight that not anymore super hype, but some years ago we had also the hype of NFTs, non-fungible tokens. So basically tokens are used to prove the ownership of some kind of art, media, products, and usage of the NFTs is also increasing. And last 2-3 years, we can see a lot of interesting DeFi projects, which is DeFi. It's basically decentralized financial services, which are created for the consumers. Several projects related with, for example, crypto loaning and crypto usage as a collateral for the loan transactions, and different projects which are helping clients to use financial services without intermediaries. So those are, let's say, main proposals or options how cryptocurrencies are used in the nowadays life. That we can talk deeply about each option in the future.
Someone told me, I remember a couple of years ago, that blockchain is an amazing idea. Where they went wrong is that they touched finance, because then it's going to be, under regulation, and it attracts all the bad players. And of course, people are creative. And if there is an opportunity to not pay tax or not submit something, usually people are tend to take advantage of that. So unfortunately, crypto has this bad annotation. But it's interesting to see that the crypto is applied to all of those areas of life where we already have a solution, but it sounds like it's a bit burdensome, it's a bit problematic. The bank is asking a lot of questions, and what's going on. It looks like that crypto is now reinventing the wheel, but still trying to replace the current systems, but without regulation, which might attract bad players. So it's really complex now, and I think that was the main reason that we needed regulation, because if something can be used for bad purposes, unfortunately it is used for bad purposes. We have seen a lot of projects which never started, although they collected money. Those were the ICOs back in the day. And of course, with the tokenization and the NFTs and using as a payment method, it gives an opportunity to bypass some kind of current regulations which are applying to the traditional money, which is the fiat money. So tell me, what were the key events which shaped the crypto regulation? And we know why. Obviously, it has to be regulated, right? If it's used by money, if it walks like money, if it talks like money, if it quacks like money, then if it's money. What were the key parts when the regulator said that, okay, now we need to deal with this? What was the history of evolvement in regulation? Because I'm sure that what happened 10 years ago and what we have today are two different things. So what happened in this?
Yeah, absolutely true. And first of all, I want to be transparent. The idea of the crypto regulation is, of course, the consumer protection and investors' protection. This is number one. But also, it is a huge market in terms of the market capital, and that's why governments are interested in regulating the virtual assets and cryptocurrencies. So, if we're talking about the events that were reshaping the crypto regulation, or let's say reasons why crypto regulation was needed, those are with a negative background, basically different hacks, scams, and things like that, which are connected with let's say protection of the human right, protection of the consumer's right, protection of the capital. And I would like to point out let's say maybe 5 main one. The first was Mt. Gox hack in 2014. This was the Bitcoin exchange, and there was a massive hack which increased a lot of questions related with the security of the transactions with the cryptocurrencies, and in general security of the crypto exchanges. Then, of course, the case with the Silk Road shutdown in 2013. There was a case when we got the information that virtual currencies do have connection also with the different activities. They are used for this and helping, let's say, terrorist financing, avoidance of the tax, drugs, human traffic, and topics like this. Then, of course, in 2020 was already introduced the MLD5, so Money Laundering Directive, which had clauses related to the virtual currencies. So basically, from 2020, there is a strict rules applied to the virtual currencies in terms of the verification of the transactions and owners of the virtual currencies. Basically, the due diligence rules are applicable to the virtual currency transactions according to the MLD5. Then, of course, we had the boom of the ICO that you mentioned since 2017, 2018, which also had a bad impact on the reputation of the virtual currencies, because we had a lot of scams. People invested in the different tokens. The projects were disappearing, lack of regulation, lack of supervision of those projects. And this was one of the reasons why in 2017, 2018, especially in Europe, countries started to regulate those ICO projects and virtual currency service providers. So basically, companies who are providing virtual currency exchange services, virtual currency wallet services, transactions in virtual currencies, loan in virtual currencies, etc., etc. That were the main reasons why we can say that governments are not fine Wild West in terms of the virtual currency industry, and they were interested in regulating this market because there were several supervisions, several court cases, several claims by the consumers when they are losing their money and having this disappointment moment. So basically police and other enforcement agencies need to react to this, and they need to have some kind of rule to be able to investigate and regulate this market. So what we do have now, I will say that in Europe, we are entering now the new era where virtual currencies are regulated within the European Union on the same level. So MiCA regulation was introduced. It came into the force for e-money token and assets reference token at the end of June 2024, and for the virtual asset service providers, so basically virtual currency exchanges, trading platforms, consultancy, wallet solutions, crypto processing services, portfolio, even crypto portfolio management, and much more. They now are regulated under MiCA. And within the European Union, we have one fundamental regulatory framework which is applicable to them. They need to be licensed. They need to fulfill the rules. They need to have the proper structure, the proper cybersecurity measures, ICT measures to manage the risk. And of course, they are subject to the compliance. I would like to say that cryptocurrency industry is not much different anymore from the traditional finance, and it is a new chapter for the industry in general in Europe. If we are having the realistic view on the situation that their life will be hard, they need to adapt, and actually they are playing on the same table with the traditional banking solutions and traditional banking market participants.
I think it was just time for this, and it had to be regulated because, as you said, that there were a lot of bad actors and scams and disappearing projects. So I think it's good that people can refer to a commonly agreed regulation, and it has to be enforced. But what I also know is that the crypto regulation in EU, it's a whole different thing than when we are going to Asia, for example. Different countries are regulating crypto differently, or when we are going to the States also that it looks completely different. So does it not just go against the principle that now the crypto is same as traditional financial assets, as money, as currency being transferred all over the world? Because if China is regulating crypto differently or even banning it, or, for example, Russia has a different crypto regulation, and maybe we can't do the relevant sanctions on that, which are in place right now. Or in any other countries having a different crypto regulation, and then they have different fiat regulations, sanctions, blacklists, whatnot. Does it not make an absolute complexity? So it basically refers to the next question, which how do different countries' crypto laws create business challenges? Because I'm a business, I want to do my own thing. Do I really need to be up to date with all the different countries, all the different crypto regulations, fiat regulations, banking regulations? How am I going to make business, right?
Yeah, that's true. It's challenging that there is no simple answer to this. We do not have the global rules, global regulation. We do have, let's say, international organization FATF recommendation, which are basically applicable everywhere in the world. And countries and regulators are taking those recommendations into account. However, if we are talking about the regulatory regime in EU, now it will be the same. If we are talking about the third countries, there is still differences, and businesses need to adapt and comply with the different rules and different regulations and take into account, as you mentioned, not only compliance regulation, but also everything related with accounting, taxes, everything related with data protection, investment regulation, which are different by countries. The answer is, if you are planning to have a business in the crypto sphere, first of all, you need to start with homework and road mapping and investigation, which kind of regulation and rules are applicable in this particular market. And to be transparent, you cannot do this alone, because it will be maybe a very brief overview about the market requirements, but you need to use the expert opinion, maybe legal opinion, or legal research regarding the requirements, and evaluate all kind of obligations before you start or plan your activities in the particular country. I do not think that this is a realistic view to expect, let's say, within some years that we are having some fundamental principles which are applicable in each particular country in the world. It's still new industry in some countries. It is not regulated at all. Some countries are regulating this formally, but not practically. And we do see different approaches by the regulators. It's not only in EU, but also around the world. So for the companies, it's basically meaning that every time when they are considering the new market, they need to do their own investigation homework to understand if the rules of the particular country can be supportive for their business model.
What if not? What can happen to me? So, for example, I'm running my own business. I'm trying to transact internationally. More or less, I know the rules. I know that what the bank accepts and what not. But I've got a client and he wants to pay me, for example, in crypto. Can I get in trouble of accepting crypto, or even just holding funds on behalf of someone else? For example, I'm running a marketplace maybe, and people pay me with crypto, and I'm holding the funds, deducting my commission and sending it to the sellers, running the whole marketplace. What are the legal repercussions in case that I'm doing something wrong? What are the legal risks? Can I even go to jail? What's happening there?
This is a very complex question. If we are talking about accepting crypto as a payment method, let's say you are shop selling bicycles and would like to accept not only the cards and bank transfers, but also crypto as a payment method. You can do it. This is acceptable, but you need to do it through the licensed partners who are having the right to provide such services. So basically, virtual asset services are regulated, and the special license is needed for the particular services. So, for example, in the current case, there should be a provider, basically crypto processing company, who is registered, who is compliant, who is following all kind of AML rules, and will onboard you as a partner, as a client, and will give an opportunity to accept crypto as a payment method from the clients to your created account on their platform, and will do the periodic payout to your bank account. While you are choosing such partners, you need to focus on, let's say, their background check, taking into account the legal aspects, reputational aspects, and security aspects related to this platform. Also, potentially, you can accept the crypto as a payment method to your own wallet, which is created. It can be hot wallet or cold wallet if this is, let's say, direct transfer. But in that case, you need to take into account the local regulations and requirements related to the accounting and taxes on cryptocurrencies. So if it is allowed in your country, you can accept cryptocurrencies as a payment method, but you need to show it in your balance sheet. You need to talk with your accountant. you need to figure out how you need to declare it according to the local tax acts in your country.
And if I accept by mistake, let's say I've got this bicycle shop, I open my own wallet, I declare it, of course, I pay the relevant VAT or whatnot after the sales of my bicycles. But by mistake, I accept the crypto from someone that I shouldn't. Maybe it's coming from an anonymous wallet, maybe it's coming from a sanctioned individual, maybe it's coming from a country that I shouldn't do business with. What can happen to me as a business? What are my responsibilities? How to filter out where I do business with and who are my clients, where I accepting crypto from? Is there any rule for that? Is there any kind of guidance in the law that I need to pay attention to?
Yes, once again, everything related with the acceptance of crypto as a payment method, you need to have a look on your local regulation, especially basically regulated in the IML Act of your particular country. It's always depending also amount of the transaction. And if you do have any suspicious related to the transaction, for example, you accepted the payment from the client who is, for example, under the sanctions. Especially now, this is a very critical questions and challenging questions for the users. Basically, you need to investigate and do your own due diligence on the transactions with the virtual currencies. And if there is an alert that this person is under the sanctions, you need to do the reporting to the regulator and inform about this transaction, and they will provide the guideline what you need to do with this transaction. Basically, it is a freezing of the funds, not proceeding with this transaction. Also, basically, you need to provide all the information to the regulator, and they will provide the guidance how you need to perform this particular client. And of course, if you do have some kind of suspicious related to the money laundering or terrorist financing, you are not allowed to do those transactions. And you need to report, and you need to have needed documentation regarding this client, idea of this transaction, proposal of this transaction, also personal data of this client, meaning verification of the client. You need to have it. So those are rules that are applicable. According to the law, there is a difference between obligated entities, so meaning obligated entities under the IML Act who need to anyway apply all rules stated in the IML Act, basically financial institutions, attorneys, auditors, tax advisors, virtual currency service providers, and several financial institutions. They are basically in the list. And there is always a clause that all others who are accepting the payments need to do the due diligence measures if they do have any suspicious or over the particular amount of the transaction. So you need to take it into account. You need to be prepared. So once you are having in mind the idea of accepting the crypto assets, the easiest way is to use intermediaries for this, basically the virtual asset service providers who are fully regulated. So they will do the due diligence, they will take the risk on them, will process the payment on behalf on you, and you basically receive the funds and fiat if you are interested or can hold the crypto on your wallet. This is maybe the typical use case regarding the crypto processing and crypto acceptance as a payment for the legal entities.
You mentioned that there are obviously these crypto payment processors, and we are talking about them in a different meaning that the traditional banks and the traditional payment institutions. So crypto payment processors are different from banks. This is the question. But why? What are the main differences? I understand crypto is different than fiat, but now we are talking about it that if it looks like money, it has to be regulated as money, and it basically merges into, doesn't matter if it's euro, dollar, Bitcoin, it has to be treated in the same way. Why are we still talking about crypto processors differently? What are the different responsibilities and legal framework that the crypto processors need to adhere to other than the traditional banks?
Taking into account the coming and currently in force regulations on the EU level, especially MiCA, TRF, DORA from the 17th January, I would like to say they are not much different anymore from the traditional banks in terms of the process of onboarding, due diligence. It is not easy to open the bank account. So for example, if I'm a law firm and from tomorrow I would like to accept crypto as a payment method, I need to go through the onboarding with the crypto processing company. And this will take me also a week or something with the list of the documents that I need to submit. And the process is very similar to the onboarding with the fiat card payment processing, so acquiring service provider. To be honest, I think that in terms of the compliance and onboarding processes, if this crypto processing company is legal, compliant, certified, licensed, the process will be the same because they're acting according the same act, the same rules, the same directive within the European Union, which is related with the compliance. So the need to apply all kind of similar or same requirements to onboard you as a client. The difference between crypto processing company from the traditional bank, like in terms of the idea of the or nature of the cryptocurrencies, that it is done without a centralized system. But in terms of the crypto processing company, which is regulated under, let's say, MiCA, for example, they do need to have the governance structure. They do need to have the members of the board or directors who are responsible. They do need to have the traditional bank account. They do need to comply with the AML rules. So it's still similar structures, similar systems, similar organizational requirements, but the difference maybe is related to the fees that are applicable to the transaction, and also the speed of the transaction, especially if we are talking about the international payments, let's say with the third countries.
Yes, because if you think about it, SEPA now is mandated to be instant. So within the EU, the SEPA rails have to be instant as well. That basically makes crypto obsolete because then it's regulated as traditional money. It's also instant. The fees on the SEPA instant are also by law has to be kept on a minimum. So that means that crypto cannot really have any kind of competition with the traditional means in the SEPA. However, the SWIFT, as you mentioned, that the international transactions there, the speed and the fees could be significantly different. But it's interesting to see that there is no difference, or even that the difference gap is getting closer and closer. The fiat turns into crypto, and the crypto turns into fiat at the end of the day, with the central bank digital currencies as well. There are a couple of projects on that. So blockchain based virtual assets like crypto money is also regulated and controlled as the traditional money. So it's interesting that there is not going to be that much of a difference between crypto and the traditional currencies. Let's talk about the users. You also mentioned a lot about the different scams and the different creative projects which go disappearing. What are the legal protections for consumers who are using crypto for payments? Because when we are talking about traditional money, if there is a scam, if there is a problem, at least I've got a legal remedy. I go to my bank, I report the transaction, I go to the police, I have some kind of legal safety around me. But what's happening with crypto even today? Can people go somewhere and complain in case that they fell for a fraud, or what's happening here?
The answer is yes, of course. Like in terms of the consumer protection, first of all, if you are using crypto assets, you need to do a little bit of your homework. You need to understand the nature of the crypto assets and risks related to this. If you are using some kind of platforms, let's say crypto exchanges, trading platforms, or solutions to create the wallet for the storage of the cryptocurrencies, you need to focus on the several things. And first of all, investigation or background check on your service provider. You need to be sure that they are regulated, they are compliant, they are safe and secure. Internet, you can find a lot of information. Basically, if you go to the website of the particular cryptocurrency exchange platform or wallet solution, if it is not possible to find in the legal documents of this company, in the footer of the website, the information about the company behind this, the information about the license they have, the information about in which particular country they are regulated and what country laws are applicable, and you cannot find out the transparent pricing policy or terms and conditions, those are red flags, and you shouldn't use such services, and you shouldn't store your cryptocurrencies or use such platform for the investment or payment purposes, because it is very dangerous for you. In terms of the EU market, there will be register for the regulated virtual asset service providers. So you can basically check by name or registry code if this company is compliant within the European Union, in which country they are regulated, and which kind of services they are allowed to provide, and in which countries. So basically, by this simple background check, which will take you 2 minutes or even less, you can get some kind of information regarding where are you storing your funds, basically, and should I use such services. This is more practical advice. In terms of the consumer protection, you also need to think if it is reasonable for you to hold your funds in the hot wallet or cold wallet. Basically, in the cold wallet, you are responsible for your keys. You are not sharing this information with the third parties, and this is more secure. With the hot wallet, which are basically created on some kind of let's say exchange platform, trading platform, and they are holding the keys of the client, and potentially there is a higher risk of the, let's say, scam, fraud, data protection breaches, which can create the situation when you can lose your funds. And if such situation happen, then you can, of course, as a victim of the financial scam or financial fraud, you can submit the claim, and depending on the case, it can be the claim to the civil court, or it can be claimed to the police, or it can be claimed to the enforcement agencies, depending on the particular case and regulations in your country. So it's not like if something happening with, so for example, if 10,000 K in fiat are stolen, I can be protected, and if the same amount is stolen in crypto, then it's nothing to do. I need to forget about this money. I would rather to say that investigations related with the cryptocurrency transactions are even easier, because all transactions are trackable and they are stored on the blockchain, and you can receive this data. In comparing to the fiat, you cannot get this data always, especially if it is in cash, etc. In terms of the investigation possibilities, both is possible, fiat or crypto, and it's depending on the quality of the investigation by the enforcement agencies in the particular country.
And I think that there is also a clause in the law which says that regulated exchanges have to also check where the money is being sent to. So they cannot send the money to an anonymous wallet. I think it's for this reason that it cannot be sent into a scammer's anonymous wallet, and then we know which wallet holds the funds, but where does it belong to? How can we get it back, right? So the regulator even thought about this part as well. Am I correct?
Yes, this is correct, and this is quite new requirement. This is a TRF regulation, which is applicable from the end of 2024. And basically, the idea of this is implementation of the travel rule, which basically give a right, an opportunity, an obligation to the virtual asset service providers to inform and investigate the beneficiaries of the transactions and report them to the regulators and tax authorities. And if we are talking about the travel rule, of course, it is still a new thing for the virtual asset service providers, but it's very similar to the traditional financial markets rule that is applicable there. So basically, if there is a transaction from the bank in Germany to bank in Spain, there is a corresponding bank, and information about the beneficiaries is exchanged between the parties, and everybody are having this. In the crypto world, it is something new, but we are getting there, and this is a new requirement which is applicable already to the crypto asset service providers who will be regulated under the MiCA.
And you mentioned another very interesting thing. I always say that to my clients as well, that if it's too good to be true, it's usually is just it doesn't exist. So when you mentioned to do the due diligence, find out that who is regulating that specific company, which country are they incorporated at and working with. It is a lot of work, but if someone is opening a wallet for you or offering to hold your crypto within a fraction of a second, that could be also a red flag. As you said, that nowadays it's very hard to open a bank account for a reason. It's the same way that if you want to open a crypto account or open a crypto wallet, it has to go through the same rules and regulations and checks and due diligence and AML procedures. So if it takes longer, then your money is safer. We can say it as a general rule maybe, but that really applies as well for every case in a business and its operations. That if someone is checking who are you, they're going to check other clients as well. So you as an individual or a business holding funds with that provider has less of a chance that something is going wrong and your money is disappearing with that as well. Let's talk about the hacks and scams, because as we mentioned, during the history of crypto and the history of banking, as a matter of fact, as well, it's the same for everywhere. Hacks and scams and creative individuals and new innovations are the ones which are fueling the regulation. So the regulator is doing something and there is a new innovation, criminals are going around the system, so the regulator has to catch up. So how do these hacks and scams impact the laws and regulations? And I'm thinking about here the timelines. Are we quick enough? Do we have a quick response in case that we see that, okay, there is a scam going on, but by the time I make a law about this, of course, they're going to cash out and disappear. In your opinion, how do these hacks and scams impact the regulation? Is it good enough? Can it be improved? What's your experience with this?
Yeah, I will be transparent. Regulation is always behind. Technology is always further. So basically, we see the technology. We have good examples, then we have bad examples. And when we have bad examples, then basically the regulation is coming after this. Sometimes it's helping to prevent some kind of potential negative aspects or usage of the cryptocurrencies as well. But in practice, the regulation is always behind. If we're talking about the scams, I mentioned several, let's say, big scams which had the historical impact on the, let's say, cryptocurrency reputation, and also was one of the idea why the regulations are needed. I will not gonna repeat, but one of the last, maybe the big things was FTX collapse in 2022, which had a huge impact on the crypto industry in general, because several small exchanges and service providers were using FTX as a liquidity provider and were connected with them. And of course, it was, let's say, very strong impact on the reputation of the cryptocurrency service providers in general, because during this investigation, there was found out the lack of organizational structure, the lack of the AML rules, the lack of the cybersecurity, etc., etc. And all of this is having the impact on the, let's say, approach of the regulators by countries. If we are talking about the direct regulation which are coming into the force in the nearest future, then we mentioned MiCA regulation. So basically, this is the layer 1 of the regulation, fundamental regulation for the all cryptocurrency issuers and cryptocurrency service providers. They need to be regulated under the MiCA. They need to have the license. They need to comply with the rule. They need to report to the regulator. They need to have the business plan. They need to have the financial plan. They need to have the cybersecurity policies and manage those risks. And all of this is actually a lot for the companies to comply with, but it is needed once again to basically prevent such potential things. Another is also TRF, this travel rule implementation that we mentioned in the previous question. Also the DORA, which is applicable to all financial institutions. This is a regulation which says that everything related with the IT cybersecurity risk should be managed on the secure way, and you need to do investigation on your third parties. You need to collect this information. You need to ensure that everything is working well, and if it's not working, you need to have the business continuity plan. You need to restore your activities, and you need to have the clear policies and procedures within the company to manage those potential cybersecurity and IT risk related with the services. So those are things which are moving us to the right direction. In terms of the protection, let's say, and minimization of the scams. But let's be transparent. Scam doesn't matter if it is in fiat or in crypto, financial scam in general. It is not a case which will disappearing. It's just a part of the, let's say, financial services that are happening, unfortunately, and that's why we do have the enforcement agencies, the supervision authorities who are dealing with such situation and need to do the investigation, need to do the proper, let's say, prevention measures in terms of the webinars, in terms of the round tables with the market participants. And here is important to increase the awareness of the, let's say, clients who are using the cryptocurrencies, and also the cryptocurrency service providers. So for example, if they see bad actors or if they see red flags in terms of their competitors, they provide this information to the regulator so they can start investigation and figure out if they are acting according to the law or if there is some kind of breaches and they need to shut down this business. So basically it is like a transparent game where everybody are having one goal, which is like transparency, security, and if both users and service providers are having this legal and compliance awareness, if they are ready to cooperate with the governing authorities and supervision authorities, and the system is working efficiently, it should create the more transparent and more secure market in general.
Do you believe in deregulation?
Sure, but smart regulation.
Yeah, but the deregulation, when the regulator is making a decision and then later on reverse it for the benefit of the innovation and technological advancements. Do you believe that this could be even a case here? Because I can see that we are trying to regulate everything, but maybe too much.
It can be a case, of course. In the European Union, we do have a focus on the consumer protection. Sometimes we are going over the seas with this. And should it be like this or no? This is a complicated question. We need to dive into answer to this. But if we're taking into account only the crypto sector, then for sure the regulatory framework and regime which is currently in force in the European Union from the beginning of this year will create an absolutely other market in general after 2-3 years, when the transition period, grandfathering period, will be ending by countries, and there will be transparency who is actually staying on this market. So today we have a lot of players. It is easy to create different solutions. It is easy to provide, crowdfunding services with the crypto, with the portfolio management, with the exchange, with the loans, You can create different things before the beginning of this year. Without maybe even some kind of licenses in the particular countries in the EU, but now it is not possible. So now you need to comply with the rules, you need to fulfill the capital requirements, organizational requirements, you need to have a lot of papers, a lot of policies, you need to hire the auditor, you need to have the cybersecurity systems in place, you need to be a very responsible market participant to be regulated and officially provide your services. And of course, it's creating the situation when it is very hard to enter for the small companies, let's say startup, innovative companies who are not having a lot of budget and maybe background in the business in general. It will be hard for them entering the European market. This is true, and no doubts regarding this. And for the, let's say, bigger players who are having already the history, the capital, the organizational structure, it will be the game for them. So we will see in the current future less amount of the market participant, and the strongest, the bigger player will survive and take the main part of the market and share it.
So what do you think, what's the future for the crypto? You mentioned that there's going to be, a lot of changes, and maybe in 3, 4, 5 years time, it doesn't even worth dealing with crypto anymore, right? Because if it's just regulated as traditional financial services, then why are you making your own life harder? Just stick to the good old currencies and the good old methods. What do you think? What is the future for these crypto regulations, and how will it also affect innovation? Because if we just block everything which is innovative and going back to the traditional means, is it good for us as consumers? Is it good for business? What do you think? What's going to happen in the future here?
Yeah, first of all, the point regarding disappearing of the virtual assets, I do not believe in this, to be honest, because demand is high. Europe is not the only market. It's not the whole world. We might be not happy about this, but the reality is that, for example, such markets as India, Latam, also African countries, also Asia, in terms of the particular countries, Turkey using very actively the virtual currencies, and in some countries where the local fiat national currency is not stable, they're using virtual currencies even as a stable value. For example, I know that such cases are in some African countries, in Turkey as well, South America as well. So I do not think that we will see the situation when cryptocurrencies will disappear from the financial system. No. We will see also the changes related to the CBDCs, central bank digital currency. This is just a start. Governments will be moving by this direction, and they will try to introduce on the national level the central bank digital currencies. And for the mass adoption, it will be, of course, a big step ahead, because a lot of people are afraid using the cryptocurrencies today because some kind of bias or misunderstandings. But if it is issued by the central bank, why not? I can use it. This will also impact the industry a lot. In terms of the regulation, if we're talking about the European market, I think that this is just a start. And I can bring the parallel with the traditional finance, maybe payments. For example, I don't know, 15 years ago, we had one regulation to comply and try to figure out how much regulations you need to take into account while planning your, for example, traditional payment service. Yes, several regulations. The same will be with the crypto, and already happening actually. So it is not only MiCA you need to comply. You need to comply with the LD5. You need to comply with the Cybersecurity Act, DORA, DAC 8, TRF regulation, GDPR, and much more. So basically, you need to increase your awareness. It's not one time, let's say, task. It should be constant. You need to be updated with the regulations, especially if you would like to be like a business in this industry. If you are a user of the cryptocurrencies and would like to use them as a payment method or as investment option, you need to be aware also not only about the regulation, but approaches and, let's say, expectations of the regulator in your particular country and tax authorities, because it's different by countries, and some tax authorities are making the declaration of the tax transaction super easy. Some are asking a lot of additional information, confirmations regarding transactions, etc., etc. So you need to be aware of this. You need to comply with them, and in the next future we will see the I would like to say additional regulations related to the cryptocurrencies. We will see a lot of court practice, which will reshaping once again. And as I said before, in terms of the market participants or amount of the, let's say, services, maybe less service providers in Europe, but with a better quality and with better protection in terms of the consumer rights.
That's how it should be. Less but better quality, right?
Yeah.
And it's interesting what you said, that we need to consider all of those emerging markets, financial systems as well. And this can definitely help them to enter the global financial system. And it can definitely help them to boost their industry, although it might be a bit restrictive on Europe in the developed countries, but it definitely helps to access new markets, new areas. All of those local businesses have finally a chance to enter the global financial system. And as you mentioned, this is always what we advocate for. It needs to have a complete paradigm change from the business perspective, that you're no longer planning your operation and then find the payment method and then find the banking setup for that. And then you see that what are you allowed to do or not, and take fees that you shouldn't even consider out of desperation. But have the providers, have the financial setup, the banking and the payment flows, and build your operation around that. So the payment and banking can no longer be seen as just a side function of finance. It has to be considered as a strategic part of the operation, and plan for the cash flows before you plan for the whole operation. Well, thank you very much. It was really, really informative. Anna, is there anything else that you want to mention and we haven't talked about perhaps? Is there anything that we haven't touched?
No, I would like to elaborate on your last comments. I always say that planning and road mapping first before you do any kind of investment, not even financial, but in terms of the resource, this should be your number one step that you take. You investigate, you take the information together, you analyze, you get with the consultancies, with the specialists who are helping with the several aspects of the potential risk that you might meet, and you are planning your activities in advance. Then you can potentially succeed with your project and business model. If you are missing this part, all of this question will show up after some time, probably within the first 6 months, and then you will be in trouble.
True. That is so true, and we have seen so many clients like this. Where can we reach you, Anna, if someone would like to get more information? Of course, we've got the email address there, but is there any website that you would like to highlight that someone can ask you more question about crypto regulation?
Yeah, lexlaw.ee is our website, but also you can reach us in LinkedIn, Lexlaw Office webpage, or you can reach me also in LinkedIn, Anna. I have a super easy name, always ready to connect and provide the answers and cooperate.
Amazing. Well, thank you so much, Anna. It was an absolute pleasure having you here, and I hope that we really gave some valuable hints and tips and real life advice to all of those businesses who are baffling now. Shall I accept crypto? What can I do? What I cannot do? Because crypto is not just investment. Crypto is a payment method as well, and it should be considered as such as well. So thank you, Anna. Thank you for everyone who was here. Please send us a question. Visit our webinars in the Soltesz Institute website as well, and looking forward to catch up with you. Thank you so much.
Thank you so much. Bye-bye.
Bye-bye.